Well, I've spent most of my life watching how small decisions made in Washington become very large costs for ordinary people. And you know what? It's been the same pattern over and over again for decades now. Politicians make a decision, they announce it with fanfare, they explain how it's going to solve some problem or protect some industry or punish some foreign country that's been taking advantage of us, and then nothing happens, at least nothing visible, not right away. The financial world doesn't usually announce the bill. It doesn't send you a statement saying, here's what that policy decision is costing you personally. No, it arrives quietly. It shows up in your groceries. You're buying the same items you bought last month, but somehow the total at the checkout is higher. Not dramatically, just enough that you notice and think, that seems like a lot. It shows up in your rent. Your landlord raises it, citing increased costs. You don't connect it to tariffs on construction materials or appliances, but the connection's there. It shows up in your electricity bill. The utility company adjusts rates because their equipment costs more. Again, you don't see tariff surcharge on the bill, but you're paying it nonetheless. Your car parts cost more when something needs repair. The tools in your workshop are pricier when you need to replace them. The equipment at your small business, well, that's where it really starts to add up. By the time people notice, the damage has already been done. You've been paying these higher costs for months, maybe a year. The money's gone from your household budget, redirected to cover price increases that you didn't vote for, didn't agree to, maybe didn't even know were connected to government policy. That is the way tariffs work. And I want you to really understand this because there's a lot of confusion out there, a lot of misunderstanding, sometimes deliberately created, about who actually pays when tariffs get imposed. They sound patriotic. They sound tough. A president stands up and says, we're going to make China pay, we're going to make Mexico pay, we're going to protect American workers and American industries from unfair foreign competition. And that sounds good, right? It sounds like strength, like standing up for America, like fighting for the little guy against powerful foreign interests. But they nearly always behave like hidden tax, because here's the economic reality, the part that doesn't make it into the political speeches. When the U.S. government imposes a tariff, let's say a 25% tariff on steel imports, that tariff isn't paid by the Chinese steel company or the Mexican steel mill. It's paid by the American company that's importing that steel. The American importer writes a check to the U.S. Treasury. That's how tariffs work mechanically. And then what does that American company do? Well, they're not going to just absorb that cost out of the goodness of their hearts. They pass it on to their customers, to other businesses who use their products, and eventually to you. And the truth is simple. Every major study we have, and I'm talking about serious economic research here, not political talking points, shows that almost the entire burden falls on American companies and American families, not foreign exporters. They're still selling their products. Maybe they sell slightly less volume because the higher prices reduce demand a bit, but they're not writing checks to the U.S. Treasury. Overseas governments, they're not paying these tariffs. Sometimes they retaliate with their own tariffs on American exports, which hurts American farmers and manufacturers, but they're not bearing the burden of our tariffs. You and the people who employ you, that's who pays. American businesses paying the tariffs directly, American workers seeing smaller paychecks or fewer job opportunities because their employers are dealing with higher costs, American families paying higher prices for goods. Now, lately people have been talking about tariff plans as if they are cost-free, or as if someone else is going to pick up the tab, as if this is free money for the government, extracted from foreign countries who've been treating us unfairly. And I understand the appeal of that narrative. Who wouldn't want to believe that we can fund government programs and protect American industries without any cost to ourselves? But I do not traffic in fantasy. I've built my career, my reputation, my entire approach to investing on looking at reality clearly, on understanding what's actually happening, not what politicians or marketers or spin misters want me to believe is happening. I look at numbers, real numbers, data, Studies conducted by economists who know what they're doing, who don't have a political agenda, who are just trying to understand the actual economic effects of these policies. And the numbers tell a clear story. One major analysis from the Tax Foundation estimated that the tariff structure already in place acts like a tax increase of roughly $1,200 per household in 2025. $1,200. Think about what that means for your family budget. That's groceries for a couple months. That's a car payment. That's utility bills for several months. That's real money, and it's not a one-time cost. It's annual. Every year, as long as these tariffs remain in place, the average American household is paying about $1,200 more for goods and services than they would be paying without the tariffs, rising to about $1,600 in 2026. So it's getting worse. The costs are compounding as tariffs expand, as they ripple through supply chains, as businesses adjust their pricing to account for the new reality. $1,600 per household per year. That's the equivalent of a significant tax increase, except it's not called a tax. It's just higher prices everywhere. Another study from the Yale Budget Lab looked at how price levels change when tariffs ripple through supply chain. And this is important because tariffs don't just affect the immediate product being imported, they cascade through the economy. If you put a tariff on steel, that makes steel more expensive, which makes cars more expensive because cars use steel, which makes car repairs more expensive, which makes transportation more expensive for businesses that rely on vehicles, which makes the products those businesses produce more expensive. It ripples outward in waves that are hard to track, but very real in their impact. Their estimate was almost $3,800 per household in 2025. $3,800, that's more than 3 times the Tax Foundation estimate. Now, why the difference? Different methodologies, different assumptions about how quickly costs pass through supply chains, different scopes of which tariffs they're analyzing. But even if you take the lower number, even if you say the true cost is closer to $1,200 than $3,800, that's still a huge burden on families who are already struggling with inflation, with high housing costs, with stagnant wages, and it does not stop at families. Because households aren't the only ones affected. Businesses, the entities that create jobs, that generate economic activity, that drive growth, they're getting hammered too. A recent analysis reported by the Associated Press found that small and mid-sized American employers are carrying more than $80 billion in direct import tariff exposure. $80 billion. That is a very big number. When I say very big, I mean it's hard to even conceptualize at a human scale. 80 billion it's a significant fraction of the entire GDP of some states. It's more than the annual budgets of many countries. It is the kind of number that shapes hiring decisions. When a business is paying billions collectively, or even just thousands or millions individually in tariff costs they weren't planning for, they have to adjust. They have to find that money somewhere. Payroll decisions. Do we give raises this year? Do we hire that additional worker we were planning to bring on? Do we invest in that new equipment that would make us more productive? Or do we hold back, conserve cash, try to weather this storm of increased costs? Investment plans, expansion plans, small businesses that were thinking about opening a second location, about investing in new technology, about growing and creating more jobs. Well, when you're suddenly facing significantly higher costs for the materials and equipment you need, those plans get shelved. Not canceled necessarily, just delayed indefinitely until the economic environment becomes more predictable. And sometimes it affects survival. I'm not being dramatic here. Some businesses operate on thin margins. A few percentage points can be the difference between profit and loss, between staying open and closing down. When you add tariff costs on top of everything else, on top of labor costs, rent, utilities, insurance, taxes, regulations, some businesses just can't make the math work anymore. When a business has to choose between paying a tariff-inflated bill and keeping another worker on the line, the worker loses. And that's the human cost that doesn't show up in the economic models. Or it shows up as an abstraction, estimated job losses of X thousand, but behind every one of those statistics is a real person, someone who thought they had a secure job, who was planning for their future based on that income, who suddenly finds themselves unemployed, not because they did anything wrong, not because their employer wanted to let them go, but because tariff policy made it financially impossible to keep them. That's a tragedy. On an individual level, it's devastating. On a societal level, when it's happening to thousands or tens of thousands or hundreds of thousands of people, it's an economic catastrophe. So let me paint you the full picture of what $80 billion in direct import tariff exposure mean. It means small manufacturers who import components because there's no American supplier, or because the American option is prohibitively expensive or lower quality, suddenly seeing their costs jump 25-30%, sometimes more. It means retailers who import finished goods finding that their margins have evaporated, that they either have to raise prices and risk losing customers or absorb the costs and risk going out of business. It means distributors, wholesalers, logistics companies, all the middle layers of the economy that move goods from producers to consumers facing higher costs that compress their already thin margins. And it means all of that pressure ultimately flowing to two places: workers through lower wages, fewer hours, reduced benefits, or lost jobs entirely; consumers through higher prices on everything from food to clothing to electronics to construction material. Now, I know what some people are thinking, but Warren, what about protecting American industries? What about bringing manufacturing back? Isn't that worth some short-term pain? And look, I understand that argument. I really do. If tariffs actually achieved those goals, if they genuinely brought back manufacturing jobs, if they rebuilt America's industrial base, if they made us stronger and more self-sufficient in the long run, then you could make a case that the costs are worth it. But here's the problem. That's not what actually happens in most cases. What happens instead is this: American companies that rely on imported materials see their costs go up. They become less competitive globally because they're paying more for inputs than their foreign competitors are. Some manufacturing does come back to the U.S., but it's often highly automated, capital-intensive manufacturing that doesn't create many jobs. The factory returns, but it's run by robots and a handful of technicians, not by hundreds of workers. Other countries retaliate with their own tariffs on American exports, so American farmers can't sell their soybeans to China. American manufacturers can't sell their equipment to Europe. We lose export markets that were actually creating good American jobs. And the industries we're trying to protect often become less efficient, less innovative, less competitive because they're shielded from international competition. They don't have to improve to survive. They just have to lobby for continued protection. I've seen this movie before, by the way, the Smoot-Hawley Tariff Act of 1930, designed to protect American farmers and industries during the early Great Depression. It raised tariffs on over 20,000 imported goods. What happened? Other countries retaliated. Global trade collapsed. The Depression got worse, not better. It took decades to undo the damage. We've had other episodes of protectionism since then, some smaller, some larger, and the pattern is almost always the same. Short-term political benefit for the politicians who impose the tariffs. They get to look tough, to appear to be fighting for American workers. Long-term economic costs that exceed the short-term benefits. Higher prices, lost jobs in export industries, reduced economic growth, strained relationships with trading partners. So when I see $80 billion in tariff exposure hitting American businesses, I don't just see a big number. I see small business owners staying up at night trying to figure out how to keep their doors open, workers getting their hours cut because their employer can't afford to keep everyone full-time, families making hard choices about what to cut from their budgets because everything costs more, communities where the local factory closes, not because of foreign competition, but because tariff costs made domestic production unsustainable. That's the real cost, not just dollars and cents in an economic model. Real people, real communities, real lives affected. And here's what really bothers me about the whole situation. It's sold as helping American workers, as protecting American jobs, as making America great again. But the reality is exactly the opposite. It's hurting American workers through higher costs and lost jobs. It's damaging American businesses that can't compete with tariff-inflated input costs. It's making America weaker economically, not stronger. And the people who pay the price aren't the wealthy, aren't the political class who impose these policies, aren't the lobbyists who argue for protection. It's ordinary families, people who are already struggling, people for whom an extra $1,200 or $1,600 or $3,800 a year is a genuine hardship. Those are the people bearing the burden of a policy that's supposed to be helping them. Now, I want to be clear about something. I'm not against all tariffs in all circumstances. There are legitimate uses for tariffs. National security concerns sometimes justify protecting certain industry. Responding to genuinely unfair trade practices, dumping subsidies, intellectual property theft, sometimes requires tariffs as leverage, and sometimes carefully targeted tariffs on specific products or specific countries for specific and limited purposes can be a useful policy tool. But that's not what we're talking about here. We're talking about broad-based tariffs imposed on multiple countries, covering vast swaths of imported goods without clear economic justification or strategy beyond tariffs are good. That's not careful policy. That's not strategic thinking. That's economic malpractice. And the $80 billion cost to American businesses is proof of that. That's not the cost of a targeted strategic use of tariffs. That's the cost of using tariffs as a blunt instrument without sufficient regard for the consequences. So where does this leave us? Well, we've got families paying $1,200 to $3,800 more per year because of tariff-driven price increases. We've got businesses carrying $80 billion in direct tariff exposure, forcing them to make difficult choices about hiring, investment, and survival. We've got an economy that's less competitive globally because our businesses are paying more for inputs than their foreign competitors. We've got strained relationships with trading partners who've retaliated with their own tariffs on American exports. And we've got political leaders who continue to double down on these policies, insisting they're working, that they're helping, that the costs are being borne by foreigners rather than Americans. It's a mess, an expensive, damaging, unnecessary mess. And that's why I'm speaking out about it, why I've been warning about the economic dangers of overly aggressive tariff policies. Not because I'm opposed to protecting American workers. I care deeply about American workers, about American families, about the economic security and prosperity of this country, but because I understand that tariffs, as they're being used right now, aren't protecting workers. They're hurting them. They're not bringing back jobs. They're eliminating jobs in industries that rely on affordable imported materials. They're not making America stronger. They're making our economy less efficient, less competitive, less prosperous. The $80 billion mistake isn't just about the money, though the money is real and significant. It's about the misunderstanding of basic economics, the belief that you can impose costs on imports without those costs falling on American businesses and consumers. It's about the short-term political thinking that prioritizes looking tough over actually achieving good economic outcomes. It's about the failure to consider second-order effects, third-order effects, the ways these policies ripple through a complex economy in ways that are hard to predict but very real in their impact. And it's about the disconnect between political rhetoric and economic reality, between promises made on the campaign trail and the actual consequences experienced by real families in real communities. I've spent 60 plus years watching markets, studying economics, analyzing how policies affect people and businesses, and I can tell you with absolute confidence, this tariff policy, as it's currently structured, is doing far more harm than good. The families paying higher prices know it, even if they don't connect those higher prices to tariff policy. The businesses struggling with $80 billion in additional costs know it, even if they're afraid to speak out publicly for fear of political retaliation. The workers who've lost jobs or seen their hours cut know it, even if they blame other factors rather than the tariff policy that contributed to their employers' struggles. So, what's the solution? Well, it starts with honesty, with acknowledging the real costs of these policies, with admitting that tariffs are taxes on American businesses and American consumers, not on foreign countries. It continues with careful analysis, looking at which tariffs, if any, are actually serving legitimate policy goals, which ones are doing more harm than good, which ones should be reduced or eliminated to relieve pressure on American businesses and families. And it ends with a return to sound economic policy. Policy based on what actually works, not on what sounds good politically. Policy that recognizes the importance of trade, of competition, of efficiency in creating prosperity. That's not glamorous. It's not exciting. It doesn't make for great political speeches, but it works. It creates jobs. It keeps prices low. It makes American businesses competitive. It raises living standards. And that's what we should be focused on. not on political theater, not on looking tough, but on actual results that actually help actual people, the $80 billion mistake can still be corrected. These policies can still be revised. The damage can still be limited, but it requires acknowledging reality, listening to economists rather than political consultants, caring more about outcomes than about appearances. And I'm not sure we're there yet. I'm not sure the political will exists to admit mistake and change course, but I'm going to keep speaking up, keep pointing out the real costs, keep explaining why this approach isn't working, because $80 billion isn't just a number. It's businesses struggling, it's families hurting, it's communities suffering, and they deserve better. They deserve policies based on economic reality, not political fantasy. That's my message, that's my warning, that's what the numbers tell me. And the numbers, as I've learned over a lifetime, don't lie, even when we really wish they would. Well, when I listen to leaders propose wider tariff programs, I cannot help but remember what decades of research have shown. And I mean decades. We're not talking about one study or one economist's opinion. We're talking about accumulated evidence stretching back generations across different countries, different time periods, different political systems. And the finding is consistent, almost boringly consistent. Tariffs almost always raise prices. Not sometimes, not in special circumstances, almost always. It's about as close to an economic law as you're going to get. Yale's estimate suggested the combined price level effect could be around 2.3%. Now, 2.3% doesn't sound catastrophic, does it? It's not hyperinflation. It's not the economy collapsing. But think about what that means practically. 2.3% on top of everything you buy. Everything. Food, clothing, gas, utilities, car repairs, household goods, tools, electronics. All of it costs 2.3% more than it would otherwise. For a family spending $50,000 a year on goods and services, that's an extra $1,150 every year, just gone, paying for a policy that's supposed to be helping you. People do not always see it in one big spike. And that's part of what makes tariffs so insidious, so hard to fight politically. If the government announced, we're raising your taxes by $1,200 this year, people would be furious. There would be protests. There would be political consequences. People would demand accountability. But when it happens through tariffs, through gradual, diffuse price increases across thousands of products, it's invisible. You can't point to it. You can't fight it. You just pay it. They see it in smaller grocery bags. You go to the store with the same amount of money you had last month. You buy the same items you always buy, but somehow you're leaving with less. The bag's not as full. You had to skip a few things to stay within budget. You don't think that's because of tariff policy. You think things are just more expensive these days. Higher bills, utilities go up, insurance goes up. Car payments go up because vehicles cost more. Rent goes up because the landlord's expenses have increased. Each one individually might seem small, explainable, just normal inflation, right? Just the way things are. Thinned out budgets, but when you add them all together, when every category of spending is a little bit higher, your budget gets squeezed tighter and tighter. Less room for savings, less room for emergencies, less room for anything beyond the bare necessities. And when all of those small increases spread across millions of households, you get a national drag that is hard to escape. Because it's not just affecting you, it's affecting everyone. Every household in America is facing these same pressures. Every family is making the same kinds of cuts and adjustments. And when millions of families all simultaneously have less discretionary income, less ability to spend on non-essentials, well, that slows down the whole economy. Businesses see reduced demand. They scale back hiring or investment, which creates more economic pressure, which makes the problem worse. It's a cycle, a drag on growth that compounds over time. I have no interest in telling anyone what politics they ought to support, and I mean that sincerely. I'm not here to advocate for Democrats or Republicans. I'm not here to tell you who to vote for or what party to support. People have different values, different priorities, different views on what government should do and how it should do it. That's democracy. That's healthy disagreement about important questions. I respect that. I don't presume to have all the answers on political or social questions, but I am only here to say this. There is what sounds good at a rally, and there is what works in the real world, and that distinction matters, really matters. At a rally, you can say, we're going to make China pay for decades of unfair trade practices. We're going to bring manufacturing back. We're going to protect protect American workers, and that sounds great. The crowd cheers, people feel heard, people feel like someone's finally fighting for them. I understand the appeal, I really do. But in the real world, in the world of actual economics, actual businesses, actual family budgets, tariffs function like a sales tax pasted on top of almost everything a working person touches. That's not political opinion, that's not ideology, that's just how the mechanism works. The government charges a tariff on imported goods. The American company importing those goods pays the tariff. That company passes the cost along to customers. Those customers, working people, families, small businesses, pay higher prices. It's a tax by another name with different optics, but economically it functions exactly like a tax. There is no magic trick that makes someone else pay it, and I wish there were, honestly. If there were a way to impose costs on foreign competitors without those costs landing on American consumers and businesses, I'd support it in a heartbeat. But reality doesn't work that way. The costs land here on us, on American families and American businesses. And no amount of political rhetoric changes that fundamental reality. Years ago, when I was younger, I used to believe that people learned from history. I was optimistic, idealistic even. I thought, well, we've made these mistakes before. We've seen what happens. Surely we won't repeat them. But history shows that we often repeat the same mistakes dressed in new slogans, different words, different political contexts, different justifications, but the underlying policy, the same. And the results, also the same. We saw this during earlier rounds of trade battles, the 1930s, the 1970s, the early 2000s, different eras, different presidents, different political coalitions, but the pattern repeated. Tariffs got imposed, politicians promised they would help, and then the costs did not land overseas. They didn't land on Chinese factories or Mexican manufacturers or European exporters. Those entities were affected, sure, but they weren't the ones primarily bearing the burden. They landed in Ohio, Iowa, Pennsylvania, Wisconsin, Texas, California, in American state, in American communities, in the heartland and the coasts, in red states and blue states, everywhere. Everywhere goods move, everywhere families budget, everywhere small companies fight to stay alive. Because tariffs don't discriminate. They don't just affect coastal elites or big corporations. They affect everyone who buys imported goods, which is basically everyone, and everyone who works for companies that use imported materials, which is a huge portion of the American workforce. That pattern is not mysterious. It is the way economics works. And we know this. We have the data. We have the historical examples. We have the academic research. The information is available. The evidence is clear. The pattern is consistent. And yet, here we are again, repeating the same mistakes because the political incentives favor promising easy solutions over explaining complicated realities. Now, what does this mean for an investor? And this is where I can speak with particular authority because I've been investing for over 60 years. I've navigated all kinds of economic environments, all kinds of policy regimes, all kinds of political leadership. And I can tell you this, when policy becomes unpredictable and the cost of doing business becomes a moving target, investors begin to stand back. They don't panic necessarily. They don't all sell everything and run for the hills, but they become cautious, defensive. They hold more cash. They demand higher returns for the increased uncertainty. They delay major investment decisions. You cannot value a company with clarity if its supply chain, input costs, and margins swing with every change in the tariff schedule. Think about how stock valuation works. You're trying to estimate a company's future cash flows. How much money will it generate over the next 5, 10, 20 years? What are those cash flows worth today? To do that, you need some reasonable assumptions about costs, about revenues, about margins. But if input costs can change by 20 or 30% based on tariff policy that shifts with political winds, how do you make those estimates? How do you have confidence in your valuation? You can't, not really. You're just guessing. And when you're guessing rather than analyzing, you demand a higher return to compensate for that uncertainty. Investors want rules, clear, predictable, stable rules, not necessarily rules that favor any particular outcome, but rules that are known, that are consistent, that allow for planning. They want consistency, not perfection, not policies they personally agree with on every point, but consistency, the ability to make plans based on reasonable expectations about what the policy environment will look like in the future. They want to know that the cost of steel or microchips or imported machinery is not going to double because someone needed to score a political point. And when they can't know that, when policy is being made based on political expediency rather than sound economic analysis, they pull back, they become defensive. And that's exactly what I've done with Berkshire Hathaway, $334 billion in cash, not because I can't find anything to invest in, but because the uncertainty is high enough that I'd rather wait for better visibility. And here's what that means for the broader economy. When investors like me are holding cash instead of deploying it, that's capital that's not going into productive investments. It's not funding new factories. It's not creating jobs. It's not developing new technologies. It's not expanding businesses. It's just sitting there waiting for clarity that may or may not come. And when you multiply that across the entire investment community, when pension funds, endowments, mutual funds, private equity, venture capital, individual investors, when all of them are more cautious because of policy uncertainty, well, that slows down economic growth. It means fewer jobs created, fewer opportunities, less dynamism, less innovation, not because there aren't good investment opportunities, but because the uncertainty makes it too hard to evaluate those opportunities with confidence. So you've got this cascading effect. Tariffs raise prices for consumers. Families have less discretionary income. They spend less. Businesses see reduced demand. Tariffs raise costs for businesses. They have less money for hiring, expansion, investment. They make more conservative decisions. Economic growth slows. Tariffs create policy uncertainty. Investors become defensive. Capital doesn't flow to productive uses. Long-term growth suffers. All of these effects reinforce each other. They compound. They create a drag on the economy that's bigger than any single effect would be in isolation. And here's what really frustrates me about the whole situation. None of this is secret knowledge. None of this is controversial among people who study economics for a living. You can argue about a lot of things in economics. Different schools of thought disagree on monetary policy, on the role of government spending, on regulation, on all sorts of important questions. But tariffs, the effects of tariffs, that's about as settled as economic questions get. Trade creates wealth. Specialization and comparative advantage allow countries to produce more efficiently than they could in isolation. Barriers to trade reduce that efficiency and make everyone poorer. This is Economics 101. This is Adam Smith in 1776. This is 2.5 centuries of economic understanding. And yet we're still having this debate. We're still implementing policies that contradict this basic understanding. We're still paying the price for ignoring economic reality in favor of political expediency. Now, I want to be fair here. I understand why tariffs are politically attractive. When you're a worker in a manufacturing town that's seen its factories close, when you've watched your community hollowed out by globalization, when you feel like the system has failed you, the promise of tariffs, of protection, of fighting back against foreign competition, that's appealing. It speaks to real pain, real frustration, real economic dislocation that's affected millions of American workers. I don't dismiss that. I don't diminish it. Those concerns are legitimate and deserve serious policy responses. But tariffs aren't the answer. They're not actually helping those workers. They're not bringing back the factories in the way politicians promise. They're not creating the kind of prosperity that allows communities to thrive. What they're doing is raising prices for everyone, including the workers they're supposed to be helping. They're making American businesses less competitive. They're inviting retaliation that hurts American exports. They're treating the symptoms, the political frustration, the sense that something must be done without addressing the underlying disease. And in the process, they're creating new problems that make the original situation worse. So what would actually help? Well, it's complicated. It's not as simple as a tariff. It doesn't fit on a bumper sticker or in a political speech, but it includes things like investment in education and job training so workers can adapt to a changing economy, support for communities going through economic transitions, infrastructure investment that makes American businesses more productive and competitive, tax and regulatory policies that encourage domestic investment without protecting inefficiency, trade agreements that genuinely address unfair practices while preserving the benefits of trade, social safety nets that help workers weather transitions without condemning entire communities to permanent decline. None of that is easy. All of it requires sustained effort, political will, and resources. But it actually works. It actually helps. It creates the conditions for prosperity rather than just the illusion of protection. And as an investor, as someone who spent a lifetime studying what makes economies grow and businesses thrive, I can tell you, prosperity doesn't come from protection. It comes from competition, innovation, efficiency, investment, education, infrastructure. It comes from businesses being forced to be their best to survive, from workers having the skills and opportunities to adapt and thrive, from systems that reward productivity and innovation rather than political connection. Tariffs work against all of that. They protect the inefficient. They reward political favor over economic performance. They reduce competition and the pressure to innovate. They might feel good politically. They might sound tough. They might appear to be doing something, but they don't create prosperity. They don't bring back jobs in any sustainable way. They don't make America stronger. They just make things more expensive. They just create uncertainty. They just drag down growth. And that's why after all these years, after all this experience, after all this evidence, I'm still speaking out about it, because the $80 billion mistake isn't just a number. It's not just an abstract economic concept. It's real costs paid by real people, real businesses struggling, real families hurting, and they deserve better. They deserve policies based on what actually works, not on what sounds good at a rally. They deserve leaders who understand economics well enough to know that tariffs are taxes on Americans, not on foreigners. They deserve an honest conversation about trade, about globalization, about economic change, one that acknowledges the real challenges without pretending there are easy solutions. That's my message. That's what the data tells me. That's what decades of experience has taught me. Tariffs don't work the way politicians promise. They don't make someone else pay. They don't bring back prosperity through protection. They just raise prices. They just create uncertainty. They just make all of us a little bit poorer. And until we're honest about that, until we stop pretending there's a magic solution that costs us nothing, we're going to keep making the same mistakes. We're going to keep imposing costs on American families while claiming we're helping them. We're going to keep weakening American businesses while claiming we're protecting them. We're going to keep reducing our prosperity while claiming we're making America great again. The numbers don't lie. The history doesn't lie. The economic reality doesn't lie. It's time we started listening to what they're telling us before the $80 billion mistake becomes a $100 billion mistake, or worse, because the meter's still running, the costs are still accumulating, and every day we continue down this path, we're digging the hole a little bit deeper. That's the truth, whether we want to hear it or not. Well, a country's competitive strength is not in how loudly it announces its toughness. You know, I've watched countries and companies for decades, and I've learned something important. The ones who talk the most about how tough they are, how strong they are, how they're going to dominate, well, they're usually not the ones who succeed. Real strength is quiet, it's consistent, it's reliable. It is in how reliably it allows businesses to operate, plan, and grow. That's what creates prosperity. That's what makes a country competitive. Not rhetoric, not bluster, but the simple, boring reliability of a system where businesses know the rules, can plan for the future, and can invest with confidence. And when tariffs start hitting employers with $80+ billion in extra burden, or hitting households with thousands of dollars in price increases, the system begins to lose the predictability that markets reward. See, markets don't reward toughness. They don't reward nationalism or patriotic speeches or promises to fight foreign competitors. They reward predictability, stability, the ability to forecast costs and revenues with reasonable confidence, the knowledge that the rules won't change drastically overnight because of political calculations. When that predictability disappears, when costs swing wildly based on tariff policy that changes with political winds, markets pull back, investors become cautious, Growth slows, not because anyone's trying to hurt America, but because uncertainty makes it impossible to operate efficiently. I have seen this story before, and that's what's so frustrating about watching it unfold again, because it's not new, it's not unprecedented, it's not some bold experiment we've never tried. We've tried it multiple times in different eras under different presidents, and the results are always the same. People underestimate the compounding effect of small costs. They think, well, a few percentage points here and there, that's not a big deal. That's manageable. But they forget how things compound, how a 2% increase on steel leads to a 5% increase on cars, how a 5% increase on cars leads to higher transportation costs, how higher transportation costs lead to higher prices on everything that gets shipped. It cascades, it multiplies, it compounds. They underestimate how quickly supply chains shift. When you put tariffs on imports from China, businesses don't just keep buying from China and paying the higher price forever. They look for alternatives. They shift to suppliers in Vietnam or Mexico or wherever they can find lower costs. But shifting supply chains is expensive. It's disruptive. It creates short-term inefficiencies and quality problems. And often the new supplier is only marginally cheaper after you account for all the costs of switching. So you've disrupted global trade patterns, created massive uncertainty, imposed costs on everyone involved, and you haven't even achieved the goal of bringing production back to America. They underestimate how fragile confidence can be. Confidence is everything in an economy. Consumer confidence, business confidence, investor confidence. When people feel secure, they spend, they invest, they take risks that drive growth and innovation. When confidence erodes, when people are worried about their jobs, their income, their future, they pull back, they save more, they spend less, they make conservative decisions. And tariff policy that creates unpredictability and raises costs, that erodes confidence quickly. A tariff might look like a small percentage on paper, but its effect runs through transportation, warehousing, logistics, manufacturing, retail, and then finally the family kitchen table. Think about a single product, let's say a smartphone. The tariff hits the imported components, the display, the processor, the memory chips. That raises costs for the manufacturer who assembles the phone. The manufacturer passes those costs to the distributor passes them to the retailer passes them to you. But it's not just a straight pass-through of the tariff rate. At each stage, the companies are marking up the increased costs. They're adding their profit margin on top of the higher base cost. So a 10% tariff might turn into a 15 or 20% price increase by the time it reaches the consumer. And that same pattern plays out across thousands of products, millions of transactions, billions of dollars flowing through the economy. By the time you sit down with your bills, the tariff is sitting there with you. It's in your phone bill, your car payment, your grocery receipt, your utility charges, your clothing, your tools, your household goods. You don't see tariff charge itemized on the receipt, but it's there, hidden in the prices, invisible, but very real. Never tell people to be afraid. That is not my way. And I mean that. Fear doesn't help. Panic doesn't improve decision-making. Anxiety doesn't create solutions. I've lived through enough crises, financial crises, economic downturns, market crashes, policy mistakes to know that fear is usually the wrong response. But I do tell people to be observant. Pay attention. Look at what's actually happening, not what politicians or media personalities tell you is happening. When a policy begins to behave like an invisible tax, you should not look at the speech. Look at the receipts. Don't listen to the promises about how tariffs are going to make America great again, or how we're making China pay, or how this is all part of some brilliant strategy. Look at what you're actually paying. Look at what you paid for groceries last month compared to the month before. Are prices stable? Are they rising? How much? Look at your insurance renewal. Did your premiums go up? By how much? Why? Look at the restaurant bill that felt heavier. That meal that used to cost $40 now costs $50. Is that just inflation? Or is there something else driving costs up? The market takes all of these small movements and turns them into a national trend. Individual families might not connect their higher grocery country bill to tariff policy. They just know things are more expensive. But when millions of families are all experiencing the same thing simultaneously, that shows up in the data, in consumer confidence surveys, in retail sales numbers, in inflation statistics. The market aggregates all of those individual experiences into measurable trends. And those trends affect business decisions, investment decisions, policy decisions. And here is the most important thing. Tariffs are not inevitable. This is crucial to understand. We're not stuck with these policies. We're not trapped in this situation. They are choices. They are tools. Government has lots of policy tools available: fiscal policy, monetary policy, regulation, trade agreements, investment in infrastructure and education. Tariffs are one tool among many, and like any tool, they can be used well or poorly. They are sometimes used wisely and sometimes used recklessly. There are legitimate uses for tariffs: targeted protection of truly critical industries, temporary support for industries going through transitions, response to genuinely unfair trade practices, leverage in negotiations to open foreign markets. Used wisely in limited circumstances for specific purposes, tariffs can be part of a sound policy mix. But broad-based tariffs on multiple countries covering vast categories of goods, imposed more for political symbolism than strategic purpose, that's reckless. That's using a scalpel like a sledgehammer, but they always have consequences, and those consequences always touch the people least equipped to absorb them. And this is what really bothers me, what keeps me speaking out, even though I generally prefer to stay out of policy debates. The people who can least afford higher costs are the ones bearing the burden. Wealthy people, an extra $1,000 or $2,000 a year in higher prices, that's annoying, but it doesn't change their lives. They adjust easily. Middle-class families living paycheck to paycheck, an extra $1,000 or $2,000 is devastating. That's the difference between making it and not making it, between having a little savings cushion and living on the edge, between security and constant stress. Poor families, they're crushed. Every dollar matters. Every price increase is felt immediately and painfully. And those are the families who are supposedly being helped by these policies: working class American, the forgotten middle, the people who politicians claim to be fighting for, but the policies are hurting them, making their lives harder, making their budgets tighter, making their struggles worse. So what do you do as an investor? Because ultimately you have to operate in the world as it is, not as you wish it would be. You can't just opt out of the economy because you disagree with policy. You stay calm, don't panic, don't make fear-based decisions. Don't sell everything and hide in cash because you're worried about tariffs or trade wars or economic trouble. Panic is almost always the wrong response. It causes you to sell low and buy high, exactly the opposite of what successful investing requires. You stay focused on fundamentals. What is this company's actual business? How much cash does it generate? How strong is its competitive position? How good is its management? Those are the questions that matter in the long run. Not what tariff rate applies to its products this month, not what the political environment looks like this quarter. Fundamentals drive long-term value. Everything else is noise. You buy businesses with pricing power, with low debt, with strong management, with clean governance, companies that can pass cost increases along to customers without losing market share. That's pricing power. It protects you when tariffs or other costs rise. Companies that don't have a lot of debt to worry about servicing when times get tough, that's financial strength. It gives them flexibility and staying power. Companies run by competent, honest managers who make good decisions and treat shareholders fairly, that's good stewardship. It compounds over time. Companies with proper oversight, transparent accounting, and ethical practices, that's governance. It reduces the risk of nasty surprises. You keep cash so that when markets overreact, you can buy opportunities instead of selling out of fear. This is why Berkshire holds so much cash, not because I'm pessimistic, not because I can't find anything worth buying, but because I know that markets periodically overreact. They swing too far in one direction or another, and when that happens, when good companies get sold down to unreasonably low prices because of temporary fears, that's when you want to have cash available to buy. You do not chase political noise. Every day there's some new controversy, some new headline, some new pronouncement that supposedly changes everything. Most of it is noise, static distraction from what actually matters. Ignore it. Focus on businesses. Focus on value. Focus on fundamentals. You do not confuse patriotism with price tags. Supporting tariffs isn't patriotic if they hurt American families and American businesses. Waving the flag while imposing policies that damage prosperity isn't helping America. Real patriotism is wanting what's actually best for the country. Policies that create genuine prosperity. Systems that reward hard work and innovation. Opportunities for people to improve their lives, not symbolic gestures that sound good but deliver real harm. And most of all, you do not ignore the numbers that history keeps putting in front of you. The data is there. The historical examples are there. The economic research is there. Tariffs raise prices, they burden businesses, they slow growth, they invite retaliation, they reduce prosperity. That's what the numbers show consistently across time periods and countries and political systems. Ignore that at your peril. Tariffs are not theoretical, they are measurable. This isn't philosophy, it's not politics, it's arithmetic. You can count the dollars, you can track the prices, you can measure the effects. They raise prices, we can see it in inflation data, in retail prices, in business costs. They impose burdens. $80 billion on businesses, $1,200 to $3,800 on families. They fall on family. Real people, real budgets, real struggles to make ends meet. They fall on employers, real businesses, real decisions about hiring and investment and survival. That is the verified truth, not opinion, not spin, not political positioning. Truth, measurable, documented, verified truth. And the rule I have lived by for a very long time still holds. Do not pay more for a dollar than a dollar is worth. In investing, that means don't overpay for stocks just because everyone else is excited about them. Wait for reasonable prices based on actual value. In life, it means don't accept policies that cost more than they're worth. Don't pay extra for political symbolism that doesn't deliver real benefit. And do not support a policy that asks ordinary people to pay more for what they already struggle to afford. If a policy makes life harder for working families, if it raises costs for people who are already struggling, if it imposes burdens on the people least able to bear them, why would you support it? Because it sounds tough? Because it makes you feel patriotic? Because a politician promised it would help? Those aren't good enough reasons. Not when the costs are real and the benefits are illusory. Keep your eyes open. Watch what's actually happening. Track prices. Monitor costs. Pay attention to how policies affect real people and real businesses. Don't just accept what you're told. Verify. Observe. Think critically. Keep your balance sheet strong. Whether you're a business or an individual, strong finances give you options. They give you resilience. They let you weather storms and take advantage of opportunities. Low debt, adequate savings, diversified income or revenue streams, good governance and management. Those things matter. They protect you when times get tough. And remember, noise comes and goes, but costs do not. Political controversies fade. News cycles move on. Scandals are forgotten. Dramatic pronouncements are replaced by new ones. But economic costs, they persist. They compound. They shape outcomes over time. An extra $1,200 in annual costs might not dominate any single day's headlines, but over 10 years, that's $12,000. Over 20 years, $24,000 plus whatever it would have earned if you'd been able to invest it instead of paying higher prices. That's real. That matters. That shapes your financial security and prosperity. So pay attention to the costs, not just to the noise. What do you think? Because this isn't just my opinion. This is a conversation. A debate about important policy questions that affect all of us. Do you see these costs in your own life, in your own budget, in your own business? Do you think tariffs are helping or hurting, creating jobs or destroying them, protecting American workers or burdening them? Kindly let us know in the comments. Share your experience, share your perspective, engage with others who see it differently. That's how we work through complex questions, not by just accepting what we're told, but by sharing observations and analyzing evidence together. And don't forget to like and subscribe for more videos like this. Because these conversations matter, these questions affect your prosperity, your security, your future, and the more people who understand the real economics behind these policies, who can see through the rhetoric to the reality, the better decisions we'll make collectively. Thanks for watching. Thanks for thinking critically. Thanks for caring about truth more than spin. And remember, stay calm, stay observant, and trust the numbers. They don't lie, even when we really wish they would.